This week, Federal Reserve Chair Jerome Powell signaled a cut in interest rates. It's one of the Fed's steps to keep inflation under control without triggering a recession. NBC's Brian Chung explains.
Tonight, the clearest sign yet from Federal Reserve Chairman Jerome Powell that spenders will soon get a little help.
The time has come for policy to adjust.
Translation, get ready for lower interest rates. Americans have been paying high rates on everything from credit cards to car loans and mortgages. Chris Nunn in Louisville says he's feeling the squeeze of the roughly 30% interest rates on his $6,000 in credit card debt. Slightly lower rates will at least take some of the edge off.
But even if it makes a dent, that's just going to help my monthly payments. That's not going to pay off the $6,000.
Restaurant owner Journey Rain of Grits and Waffles says lower rates will help her expand.
With interest rates being lower, I see Grits and Waffles being in every major city. I mean, being able to borrow money for a lower cost or even having credit cards with lower interest rates.
The pace of price increases has slowed from the peak of 9% 2 years ago to 2.9% last month. Now, the Fed has a new worry that its high interest rates could potentially put people out of jobs.
We do not seek or welcome further cooling in labor market conditions.
Experts say rates will come down, but don't expect to see the rock bottom rates of 2020.
They're going to drift down, but they're not going to drop like a rock.
That's absolutely right. So when the Fed does begin cutting rates, they're going to be cutting them incrementally and slowly and cautiously.
Long-awaited reprieve for an economy that remains top of mind.
Now, the central bank's Federal Open Market Committee, which decides interest rates, has their next meeting on September 17th.